Good afternoon, friends. Another important clarification pertaining to valuation on import of services by domestic related parties from their overseas related supplier. What would be the valuation when recipient is eligible for full ITC? And why this dispute? The dispute is if recipient is entitled for full ITC, which is a revenue neutral case, that domestic related party will pay the RCM liability and take the credit. It's a revenue neutral because recipient is entitled for full ITC. Can we dispute the value which is being declared in the invoice? Or let's say value is not declared or invoice is not being raised. Can we consider it as nil? As per the same circular number 199, dated 17th July 2023, when we were talking about cross-charge transaction between distinct person in India. So this circular is very, very important and providing more clarity. Let me share this circular and then we will discuss all relevant clarification which is being provided in this particular circular. So I'm sharing my screen here. So this is a circular number 210 dated 26 June 2024. As I said, it is providing clarification for the valuation of supply of import of services by a related person, domestic related person, where recipient is eligible for full ITC, input tax credit. The circular is saying when you look at entry 4 of Schedule 1, that import of services by a person from a related person or any other his establishment outside India in the course or furtherance of business, even without consideration, is a deemed supply. It is only pertaining to that. If there is a consideration, then section 7 subsection 1 clause B going to be applicable, and that's say import of services for consideration, whether or not in the course of furtherance of business. So it is not relevant for this circular. Circular is relevant only for Schedule 1, entry 4. Quite obvious, there is no consideration. Deemed supply, reverse charge liability in the hands of domestic related party. So in that context, this circular is being issued. What would be the valuation? So having said that, what it is represented and what is being clarified. So representation was sent to CBIC, and domestic related party wanted to draw same treatment which is being given to the domestic related parties or distinct person as per the clarification issued by circular number 199 dated 17th July 2023 may also be made applicable where foreign entities providing services to its related party located in India and recipient is entitled for full ITC. So to clarify this position under section 168 subsection 1, this circular is being issued. They have reproduced the rule 28 and then saying valuation would be either open market value or like kind and quality. Otherwise, rule 30 or rule 31 in a sequential order is applicable. Then there are two provisions that 90% of selling price of goods by the recipient to independent, means independent customer, that is what being referred, and the word used when recipient, I'm reading this provision so that we can get a clarity which is not relevant here, but since we are discussing, that's the reason I'm reading this provision, that goods are intended for further supply as such by the recipient. then value at the option of supplier would be 90% of price charged for supply of goods of like kind and quality by the recipient to his customer, not being a related person. But second proviso is important. What second proviso is saying, that where recipient is eligible for full ITC, value declared in the invoice by the supplier shall be deemed, shall, word use shall, it is not may, shall be deemed to be open market value of goods or services. Please bear in your mind this second provision applicable for goods or services, both. You should not have doubt, it is only talking about services. It is applicable even for the goods. If recipient is eligible for full ITC, then any value declared on the invoice shall be deemed as an open market value of that goods or services. This is what the provision talking about. This is what the rule stated. And circular was issued, circular number 199, which you must be recalling, which is again being considered in this circular number 210. What it is being saying, the circular number providing clarification was issued regarding taxability of services cross-charge provided by an office of an organization in one state to the office of that organization in another state, both being distinct persons. So cross-charge among distinct persons. This clarification was given, circular number 199. What is being clarified in this circular? They said second proviso to Rule 28 Subrule 1 in respect of supply of services by head office, HO, to the branch of an organization, value of said supply of services declared in the invoice by HO shall be deemed as an open market value of such services if recipient BO, branch office, is eligible for full ITC. So simply saying, when it was domestic transaction cross-charge between distinct person, HO is raising invoice to the branches, and whatever value picked up by HO shall be deemed as open market value. Only condition, recipient should be eligible for full ITC. So they have done away all dispute pertaining to the valuation provision. When recipient is eligible for full ITC, this is the silver lining. If recipient is not eligible for full ITC, then challenge. Then you can't apply second proviso of Rule 28 Subrule 1. Then we have to go back to that concept of open market value, like kind and quality, Rule 30, which is 110% of cost of provision, or Rule 31 residue method. And when recipient is not eligible for ITC, then they have to follow the provision accordingly, and corresponding GST charge when it is cross-charge services become cost in the hands of recipient, because they are not entitled for full ITC and they can't take advantage of second proviso of Rule 28 Subrule 1. Only liberty and relief was given in circular number 199 was that salary costs need not be included in total cost, in overall cost for the chargeability of GST when we are deciding cross-charge. So that is the only relief you can draw when recipient is not entitled for full ITC. Having said that, let me go further and read what is the context they are giving for import of services. Now, what they are saying, it has also been clarified that that circular, they are again rephrasing and saying and reiterating, where full ITC is available to the recipient branch, HO has not issued a tax invoice to the branch office. There may be a case that recipient is eligible for full ITC, but HO has not raised any invoice, which was happening prior to this circular was issued. For cross-charge, there were no invoices raised, right? So what happened? In such cases, that circular 199 clarified that in that case, value of such services may be deemed to be declared as nil by HO to branches and may be deemed as open market value in terms of proviso to Rule 28, Sub-Rule 1, second proviso. So for the past period, if invoice is not issued by HO to the branches, but recipient is otherwise eligible for full ITC, then simply it is saying that then we can consider value as nil, and that shall be deemed as an open market value to done away all litigation. And quite obvious, when recipient is eligible for full ITC, then it's a revenue neutral case. That was the concept. That is the reason this circular was issued and clarification was provided. Now they are drawing the same clarification from circular number 199 for giving clarification in circular number 210 for import of services. Kindly go with me. Accordingly, it is evident that the clarification which has been issued in circular number 199 in respect of supply of services between distinct persons where full ITC available to the recipient is equally applicable in respect of import of services between related person. So it is a very much laudable clarification. And please read 2 more paras so that we can conclude this circular to the best of our understanding. In case of import of services, of course, import we are referring entry 4, schedule 1 by registered person in India from a related person located outside India. Tax is required to be paid by registered person in India under reverse charge. Right? This is a normal provision as applicable. In such case, registered person in India is required to issue self-invoice to himself under section 31, subsection 3, clause F, and pay the tax under reverse charge basis. This is what the provision, right? Recipient who is registered will raise self-invoice to himself and pay the RCM liability and take corresponding credit. In view of the above, it is now clarified where foreign affiliate providing certain services to the related domestic entity and where full ITC is available to said related domestic entity, the value of such supply of service declared in the invoice by said related domestic entity, because he will generate the self-invoice to himself, may be deemed as an open market value in terms of second proviso of Rule 28, Sub-Rule 1. So this is the first clarification. The second one, if you look at, I'm just entering so that we can segregate it. Domestic related party registered, raising self-invoice to himself, declaring a value that shall be deemed as your open market value as per second proviso. This is the valuation. But where full ITC available, an invoice is not issued by the related domestic entity in India. He has not generated self-invoice to himself under section 31, subsection 3, clause F. So what happened? He might not have paid reverse charge liability. So what happened? Litigation, that you pay up the RCM liability. Pay up the RCM liability, then what would be the valuation, right? So it is now helping to all of us together. What it is helping and saying? It is saying that value of such services may be deemed to be declared as nil and may be deemed as open market value in terms of second proviso to Rule 28, Sub-Rule 1 of CGST rules. So clearly saying, if you have not generated self-invoice to yourself, nothing to worry for the past period. Value would be deemed as nil, that shall be deemed as a open market value, and no corresponding liability and thiemage because it is revenue neutral. So it is drawing good reference for all of us together. So this is going to help in a long-term way. Of course, laudable clarification. Whenever we look at import of services, cross-charge transaction, a reference of circular number 199, laudable one. Lot many. Stay tuned. Thank you very much.